Imagine a man so powerful he can sway international markets from behind the scenes. Meet Ken Griffin, the secretive titan of Wall Street who quietly oversees one of the world's largest trading empires. He doesn't seek the spotlight, but his firm Citadel Securities handles astonishing volumes. Citadel executes about 47% of all US-listed retail stock trades. Despite wielding such reach, Ken Griffin cloaks himself in privacy. In 2019, he shattered real estate records by buying a 23,000 square foot penthouse in New York City's 220 Central Park South for $238 million, the most expensive home ever sold in the US. At that point, he already owned a $60 million Miami Beach condo and had just snapped up Chicago's skyscraper condos for over $58 million. He spent around $122 million on a London mansion by Buckingham Palace, and more recently he poured nearly $250 million into land for a Palm Beach estate. In total, his recent real estate splurges have run to almost $750 million. And Griffin's art collection is even more opulent. In 2016, he paid a stunning $500 million for two modernist masterpieces, Willem de Kooning's Interchange and Jason Pollock's No. 17A, smashing auction records. These paintings now hang in Chicago's Art Institute, of which he is a trustee. He's dedicated buildings and gardens in his name at universities. He regularly speaks with some of the most powerful CEOs in the world, but you'll rarely find speeches or profiles about him. By design, the man remains in the shadows while his reach grows ever larger. But how did he get here? Kenneth Griffin was born in Florida in 1968 to a building supplies executive and a grandmother who ran an oil and seed business. In high school, he ran a mail-order educational software business out of his bedroom and excelled at math. He went to college at Harvard, where he became obsessive about trading. He persuaded administrators to install a satellite dish on his dormitory roof so he could pull in real-time stock quotes. And using $100,000 borrowed from his grandmother and other family friends, he launched a tiny hedge fund on his 19th birthday. Remarkably, his first fund made money in the chaos of the 1987 crash by short-selling stocks, setting the stage for a career built on daring and technical skill. Right after college in 1990, Griffin founded Citadel with $4.6 million in capital. He plowed every profit back into technology and talent, recruiting mathematicians and building computer-driven trading models. Over time, Citadel exploded. Within a decade, it managed billions of dollars, and by the 2010s had become one of the most profitable hedge funds in history. By December 2022, Citadel had posted about $74 billion in net gains since inception. Today, Citadel claims over $65 billion under management, and Griffin personally owns about 85% of it. Along the way, he spun off Citadel Securities, a separate market-making arm, and this division, staffed with high-speed algorithms, quietly stands on the trading floors, supplying liquidity on exchanges. Together, Citadel's hedge funds and Citadel Securities have rewritten the rulebook of trading, deploying secret algorithms, lightning-fast data feeds, and multi-strategy quant models that few outsiders fully understand. But they make unbelievable sums of money, and as Citadel's tentacles grew, so did its scrutiny. In 2021, during the GameStop stop frenzy, Griffin was hauled before Congress to explain what his firm does. Citadel Securities was Robinhood's top customer, and they literally paid the trading app hundreds of millions of dollars to handle its users' orders. At the same time, Citadel's hedge fund arm infused $2 billion into Melvin Capital, the struggling fund that had bet against GameStop. Reddit traders and some lawmakers began to whisper, did Griffin secretly influence trading halts that affected retail investors? Citadel flatly denied any role, but the episode laid bare how tightly interconnected his companies are to everyday traders. Meanwhile, regulators have been eyeing Citadel's core business model, payment for order flow. Citadel Securities legally pays brokers like Robinhood to route customer trades its way. This practice has enabled zero-fee trading, but critics decry it as a hidden tax on Main Street. Citadel claims it delivered billions in price improvement to investors, but watchdogs wonder if retail traders are getting a fair deal or merely funneling profits to the firm. Griffin himself had faced similar scrutiny before. He testified in 2014 after Michael Lewis's Flash Boys book put a spotlight on high-frequency trading. Throughout these debates, it's often Citadel's market-making arm that draws fire. In 2017, it agreed to a $22.6 million SEC settlement for undisclosed algorithms that gave clients worse prices than available elsewhere. Citadel Securities now literally possesses nearly half of all retail stock trades in the United States. And this dominance is why Griffin's name has popped up in every market scuffle, from meme stock madness to takeover fights. Griffin's influence extends beyond markets into the halls of power. He's become a major political donor, especially to Republican causes. In the 2020 election cycle, Griffin gave roughly $61.4 million, almost entirely to GOP candidates and leadership PACs. 2 years later, he poured another $60 million into politics, again predominantly backing Republican campaigns. He bankrolls super PACs in state referendums and is known to favor small government candidates. Beyond checks and PACs, Griffin cultivates influence through personnel. Citadel has quietly hired a who's who of former regulators. Ben Bernanke, the ex-Fed chair, is a senior advisor to Citadel. Former SEC and CFTC leaders have joined as counsels and lobbyists, and the revolving door runs both ways. For example, Citadel welcomed back to its ranks the SEC's former head of market regulation, and even a past CFTC chair. Griffin's network spans the agencies that oversee the markets. With dozens of millions in contributions and ex-regulators in his fold, he wields an unusually direct line to power on Capitol Hill. Ken Griffin's trajectory is both astounding and unsettling, crossing seamlessly from trading floors into the halls of government and philanthropy. With one finger on financial markets and another in political campaigns, Griffin embodies a new reality: that extreme private wealth can quietly rewrite rules and shape public life. Thanks for watching. Please subscribe.